So welcome to this ACITI webinar. Today we are speaking to Erwin Jackson from the Investor Group on climate change. So for those that don't know ACITI, or the Australian Centre for International Trade and Investment, we're a relatively new centre. We have two key purposes. One is to create a forum where business, government, academics and people working in think tanks who look at and work in international trade and investment can come together to discuss issues of national importance. And secondly, our key purpose is to increase awareness of the importance of international trade and investment for Australia and Australians. So today we're looking at a topic related to international investment, and part of the reason why we've invited Erwin to come and speak with us today is because at our conference last year, we focused on the topic of international trade and the environment. There was a lot of discussion about the opportunities for Australia presented by the energy transition and the emissions reduction challenge before us. But there were also a lot of questions raised about how we actually achieve our goals, how we make things happen, and principally how do we finance the change that needs to happen. So the investment in technology, the investment in new structures and the new ways of doing things. So today we, as I said, looking at this question of trade and the environment and how we fill the climate finance gap. So Erwin has very kindly agreed to join us. Erwin, for those that haven't read the blurb, is one of Australia's leading climate policy analysts and advocates. He's been working in this space for a long time. Just before we started this webinar, Erwin was talking about the many elections he's lived through where climate change policy has come and gone. So he's been doing this for a very long time. He's been responsible for developing and implementing the IGCC, the Investor Group on Climate Change's national 3-year policy priorities. He's worked with multiple governments, multiple stakeholders to build investable national climate, physical risk and climate-related risk policies. So we're very grateful that you've made the time today, Erwin. We're going to start by handing over to you to run through some initial points, and then we'll come back to questions. And if anyone is online would like to ask questions, please feel free to add them to the chat group. So Erwin, I will hand over to you.
Well, thank you very much, and thank you for the opportunity. So today I'm going to talk a bit about how institutional investors, and basically by that I mean your asset owners and asset managers across the Australian and global economy, are thinking about climate change, the kinds of trends that they're seeing, the kinds of issues that they're confronting, what they themselves are doing, and how they see some of the solutions emerging and the investment opportunities arising over the next 3 or 4 decades in this space. But my button is no longer working. Hold on, there we go. For those who don't know, the Investor Group on Climate Change is basically an industry association. We have around 100 members, asset owners and asset managers in Australia, including essentially most of Australia's largest asset owners. So essentially we capture most of the market in Australia, and we capture both industry funds, retail funds, and as I said, not just the asset owners like the super funds, but also the fund managers, such as your BlackRocks, Vanguards, IFMs, First Sentiers, etc. We were established about 15 years ago, well, even getting close to 20 years ago. And that was because that was when investors were really, it was a nascent period of them starting to think about climate change. So they essentially established IGCC to help them understand what the issues are, and understand what they needed to do to ensure that climate change doesn't impact on their ability to deliver good long-term returns to you and I, really, as Australia's superannuation holders. But I'm going to start off with the basics and why climate change essentially is, as you know, CEOs and CIOs will describe it to politicians when we meet them in Canberra, is essentially they see it as their largest long-term systemic risk to their ability to deliver long-term returns. And I'm going to sort of run through why that is the case. The first thing to say is that climate risk is something that investors can't just divest from. Like, a lot of the conversation that we see in the public debate around climate change is focused on, things like fossil fuels or renewable energy. But even if hypothetically an investor could divest entirely from fossil fuels and then just move that money into renewable energy, they would still be exposed to climate change, because climate change will affect every part of the economy in one way, shape, or form. And investors are universal owners. They invest in agriculture, they invest in insurance, they invest in banking, they invest in energy, infrastructure, pretty much the entire economy. So even if they divested completely, they would still be exposed through their exposure to climate change itself. And just to give you an example of this, this is a graph that was basically, the data for this comes from the latest report from Australia's leading climate scientists on what risks Australia faces under different climate change scenarios compared to where we are now at 1.5 degrees, increased in global temperature, 2 degrees, and then our current global trajectory towards 3 degrees. And what the scientists have done is essentially identify the main risks to Australia, or the most immediate high priority risks that Australia faces. And the one I just want to highlight here is that it's the key implementation risk that, and we're starting to start to see the edges of this already through the extremes we've seen across Australia over the last few years, essentially where the impacts become so large, they become so frequent, and they're happening at multiple locations at the same time, and they compound against each other, that the ability of the Australian system to respond, the economic system to respond to that, and manage it in a way that promotes an efficient response to those disasters, becomes compromised. And that starts to happen, from the scientists' best estimate, somewhere between global warming of 1.5 to 2 degrees. As for reference, we're currently on a trajectory to over 3. Just trying to get my screen to work. On a more brighter note, the other thing we're also seeing is that the transition to net zero is accelerating. And I've just put up some key numbers there that have come out in the last little while from groups like the International Energy Agency. And what's interesting in this, in some respects, is that this is happening more quickly now than it was 5 years ago. And why I highlight that is, in those 5 years, we've seen COVID. We've seen the invasion of Ukraine. And historically, when governments have found themselves in tough times, they've stepped back from climate or environment policy. The opposite has happened in both of those responses. While it's been, it's different in different countries, the overall trend globally in response to both the Ukrainian crisis and COVID has been to accelerate policies to drive the energy transition in particular. Combined with that, we've also seen over the last 30 years very significant drops in the price of key technologies in renewable energy, in storage, in electric vehicles, in batteries, etc. Which means now that in most parts of the world, it's cheaper to invest in renewables and storage than it is to invest in new fossil fuel infrastructure in terms of the overall cost. So increasingly, this is just the mainstream. And as the International Energy Agency said recently, we've probably hit peak fossil fuels. And essentially, the fossil fuel industry is moving into a situation where it's in structural decline. All that said, the global transition that's happening is being undertaken in a very disorderly way. We're seeing different policy responses from different governments. The idea of getting a uniform global carbon price was always a bit pie in the sky, but it's even further away than it has ever been. And increasingly, we're seeing governments globally intervene directly in markets to drive this energy transition. So as this transition is undertaken, Australia therefore basically has a choice of being caught in the winds of that global transition and letting it be buffeted by them, or create its own agency to take advantage of that transition and make sure that we benefit from that, but also that we manage the risks that are associated with that, given, for example, we are a large fossil fuel exporter. The good news for Australia is, of course, we have very significant comparative advantage in many technologies globally. We have some of the best renewable energy resources in the world. We've got a large landmass. We've got a well-educated society. We've got reasonably good governance structures. So there's a real opportunity for Australia, particularly for markets in Asia and exports into Asia, to be part of the global transition, and for Australia to position itself, as some has called it, as a clean energy superpower. Now, I myself wouldn't use those terms because I think it's a bit overblown, but it does capture the idea that instead of being one of the world's largest fossil fuel exporters, we essentially transition that to, based on our natural advantages, become one of the world's largest clean energy exporters. And that's just not in things like green hydrogen. It's also in things like bringing on value-added processes into Australia on green iron in particular. Instead of just shipping iron ore off to the rest of the world, we would actually create iron ore pellets, green iron ore pellets, and sell those. And of course, the other advantage of that is actually gives us some resilience to global supply chain disruptions, which we're increasingly seeing. But overall, potentially from Australia, it's a very good story, as long as we actually manage this and do this in a way that recognises the reality of the global transition and makes some smart decisions about where Australia has its comparative advantages and making real investments in those opportunities. The other thing that I will highlight, and it's often missed from the conversation, is that climate change, we have a certain level of climate change is baked into the system. Regardless of what we do now, the climate will continue to change for many thousands of years now. However, if we, in that context, we do need to actually implement adaptation. And this is missing from the conversation at the moment. And if we can get adaptation and emission reductions right, then we can deliver the best outcome overall for Australia. We are making some progress on adaptation in Australia. There's a new national adaptation plan coming out at the end of next year. But the cold hard reality is that we're still spending most of our resources on disaster cleanup, and not enough resources on driving investment into adaptation responses, which are going to be required over the next few decades or more. In terms of the investor response to all this, I think the first thing to say, which is obviously very relevant for this forum, is that capital is global and mobile. Australian investors like to invest in Australia. They seek many investment opportunities in Australia, but the reality is their fundamental duty is to deliver long-term returns to the beneficiaries. And if they can get better returns for investment in other jurisdictions, then they will do that. And one of the things we've actually seen over the last sort of 15 years or so is a propensity of investors, when they're looking at climate solutions, is to spend more money in North America, Europe, and potentially Asia than they are in Australia. So if you look across our big asset owners, for example, and the data's a bit old now, but it probably still roughly stacks up, that for every dollar they invest in renewables in Australia, they're investing 3 overseas. And that's simply largely because there's 2 main factors behind that. One is policy uncertainty and the chaos we've had in climate policy in Australia over the last 3 decades. But also it also reflects the scale of investment that investors need. So many of our members won't get out of bed for less than $250 billion. So they need to actually have large scale investments, and it's easier for them to attract those in other jurisdictions in many cases. The other thing that's really important to note about this slide, and this is from last year, we'll in March this year, we'll update it again based on the responses from our members. But this slide was before things like the IRA response, the Inflation Reduction response in the United States, which has essentially become a global capital vortex for clean energy investment, where you can get very good returns on projects because of the very large subsidies that are being offered by the US government. And of course, that's also triggered a response from other jurisdictions to try and match in one way, shape or form what the US is doing, including from Europe, Canada, Japan, South Korea and other places. So as I said, this is really just to highlight that, capital flight out of Australia because of policy uncertainty is real. It's been happening. And one of the key arguments we've been making to policymakers, if we want to keep capital in Australia and keep attracting global capital, then the better we can, the more stable climate policy we have, the better. The other thing to really note, and this sort of, I'm using this as a proxy for sort of highlighting how mainstream this is. So, this was done last year, and again, we'll be updating this soon. But, we're talking about 70% of the Australian market essentially committed to net zero by 2050 in terms of their portfolios. To achieve those goals, and many of them are setting goals for 2030 as well, such as like a 50% reduction in portfolio emissions by 2030. To achieve those goals, they need to reallocate capital. These are not just aspirational goals. To achieve them, investors have to do things. And it means that they're seeking opportunities to invest in projects that will help them meet these goals, and invest in companies that will help them meet these goals. So this is, as I said, a proxy for how mainstream this is now. There's very few board meetings that would happen between large institutional investors and their investee companies now, which don't have climate change on the agenda. And it's simply because the investors see, A, that the most likely state of the world in a few decades is going to be net zero. It might not be an orderly transition there, but it's probably going to be there. The other one is that they're simply because in the context of their own analysis of their own portfolios, the best outcomes from members, for the members' returns, are delivered by ambitious climate change policy that deals with a very rapid transition to net zero, but also to manage the physical damages of climate change itself. So again, lots of targets are being set, and it goes much deeper than this, and there's in question time where I can delve into that in a bit more detail. But it's only accelerating globally at the moment. The other core thing that, of course, investors are involved with is sort of the stewardship activities with the companies they own, to ensure that they're delivering the best long-term financial value to their shareholders. As I mentioned, climate change has become a core topic of conversation between investors and investee companies. And just to give you an example of that, a few years ago, an initiative called Climate Action 100+ was established, and it is now the world's largest investor engagement and initiative on any subject. It's got over 700 investors, eye-watering numbers of trillions of dollars in asset managers behind it, and they're actively engaging and collaborating to target the world's largest 160 systemic investors. Because in one way, shape, or form, most investors are invested in them in one way, shape, or form. And one of the most effective things that investors can do is working with those companies for them to help them to decarbonize and provide them the capital they need to decarbonize. But to do that, they need strong and firm commitments from the companies themselves. So this has become a very key activity from investors over the last few years, particularly targeted at their equities portfolios. It's now starting to move into private markets more, sovereign markets, and etc. So investor engagement or stewardship has been growing over the last few years. And you can see here that most of our members, again, have specific targets that they've set either externally or internally to drive this kind of activity. That said, one of the core things that sort of has emerged in the last 12 months or so is a growing recognition from the investment community that physical damages of climate change are so large that they need to actually start thinking about how that themselves is going to impact on their investments and their assets. But this is still a very early stage in development. It's much easier to assess what the transition away from fossil fuels will look like for an investment portfolio than it is to assess what happens if, as the Bank of India recently said, that they will never become a developed economy because of climate change, or that you can't get insurance anymore, or insurance becomes unaffordable. Without insurance, there's no investment. So those kinds of risks are actually very hard to assess, and it's a more nascent area of development, but a lot more work will go into this over the next few years. And our expectation is that these numbers will grow quite rapidly, and we'll see much more engagement from our members on the companies they own, but also policymaking and other things, which I'll talk about a bit later. Just for a point of reference, this is higher, this 25% number of asset owners who've assessed their portfolio risks is higher than what Australian companies are doing. Like there's even a smaller proportion of it across the ASX of Australian companies who are actually undertaking these assessments, which essentially is saying that physical risk and climate damages are currently massively underpriced in the market. So going on from that, and I'm highlighting this because, again, this is a really big emerging area. What we're starting to see from our members, and this is not just relevant to Australia, but also globally, is that there's a growing risk of major climate divestments from high physical risk sectors and regions. We're already seeing our members not investing in certain regions because of physical climate damages and the risks of cyclones or floods or droughts. That is only going to continue, and indeed is a very large concern and an increasing point of international conversation around how you actually manage this in emerging markets, because the physical damages will be much larger in emerging markets, and there's a real risk of getting less investment from institutional capital over the next few years, unless those countries can demonstrate that they have a national adaptation plan, which is actually going to manage or reduce those risks. For our part, we've been doing a lot of thinking internally about how we address this with our members. We released a strategy on this last year with the Assistant Minister responsible. And I've just outlined here essentially what we're focused on. One is actually just mainstreaming physical risk into investment practice. So we get the numbers I showed on that last slide right up. Also developing a better collective understanding amongst governments, communities, and investors about what is actually required on adaptation. And there's the government's releasing its first national risk assessment on climate change pretty soon. And that will highlight the financial stability risks associated with climate change. So how do we actually build a better common understanding amongst everyone about what the risks are and how we best manage them? Critically, policy is essential here. Intuitively, it's pretty hard to model in a spreadsheet or a cash flow model how the benefits to long-term returns of investment in adaptation, even though that's sort of starting to happen a bit. That said, if we've got the right policy environments and policymakers that are working with investors, there are real opportunities for public-private collaborations and financing models, which get us to the fourth point, where investors themselves are delivering capital into resilience and reducing climate change damages. Which these are some of the policy priorities more broadly. I talked about how the transition early on has accelerated, and it certainly has. And I started working on this issue in 1989 for all my sins, and I don't think anyone back then, or very few of us back then, could have imagined the scale of disruption and transformation we've seen in global energy markets over the last 30 years in response to subsidies, government policies, innovation, cost reductions in renewable energy. And I wouldn't have imagined that the IEA would be saying peak fossil fuels this early, but they are. That all said, we're still a long way from where we need to be. If we want to limit the damages of climate change to levels which don't threaten financial stability, communities at large scales and very large sections of the global economy, then we need to scale up quite rapidly. So what you can see in this chart, it's a little bit old now, but it's still pretty relevant, is that the annual flows of investment into key sectors, so energy efficiency, transport, electricity, and the agricultural and land use sectors. You can see the blues and the greys there, which the darker greys, which are the current investment levels. And then you can see the shaded greys, which are the kinds of levels we need if we're going to get on track to achieving the global goals that governments, investors, and companies have set. So a lot of upscaling. We basically need to increase the amount of investment globally in these kinds of technologies or clean energy solutions fivefold every year for the next 10, 20, 30 years. Now, in terms of what investors are after from a policy point of view, in terms of how we actually close that gap, on the graph on the side here, this is from last year when we surveyed our members on what they saw as the highest policy priorities. The text on the left gives you a bit of an update on the new results that will come out in March. But they're essentially much the same, that what investors are really looking for from government is some real guidance on how each sector of the economy is going to play its part in achieving net zero by 2050, and what the sort of policies that governments are going to put in place through time to deliver those outcomes. So it's about creating some clarity on what each sector's role is in the economy, recognizing that some sectors are going to go faster than others. Like electricity needs to go fast and quick because we've got the solutions. We can upscale renewables. There's a lot of opposition to it at the moment in certain parts of the country. But if we are going to decarbonize the economy at least cost, then we do need to massively increase investment in renewable energy generation over the next 15 years. But that said, other sectors such as critical minerals, which are a major opportunity for Australia, in the short term, the development of those resources might actually increase national emissions. So what investors are therefore interested in what other part of the economy is going to pick up the slack to achieve our overall goals. So they're not just looking for what this means at a sectoral level, so they can think about their infrastructure investments, their equity investments. It's also how it all adds up. How it all adds up to an overall economy-wide response. Is it least cost? Is it maximising opportunity? And this again is particularly, we've seen this a lot from a lot of the international investors we engage with, where some of them are already excluding Australia from their portfolios because of their perception of high risks from climate change or the transition to clean energy and away from fossil fuels. So the more the government can create a coherent picture of what it's doing, how it's doing it, how it all adds up, and where the investment opportunities are, that will give investors, particularly international investors, a lot more confidence to continue to invest in Australia. One of the things to highlight here is that, couple of the other issues that are sort of rapidly raising up the radar, I've already mentioned policy mechanisms on resilience and adaptation. But of course, the government is currently in the process of implementing mandatory climate-related disclosure requirements on large listed, large unlisted companies, as well as large asset owners and managers. Those are very important for investors to understand how companies are actually managing their climate risk, but they're also important for governments because they can start to create a picture on where the real risks are within the economy, how we're managing the financial stability risks associated with climate change, etc. So it's all mandatory climate disclosures has always been a long-term policy position of IGCC and our members. Now we're in the process of implementing it. So of course, you can imagine their interest in that has increased. Again, the sector plans part is, again, I'll just highlight this again, because this really, in the Australian context, is going to really be a big part of the national conversation this year. It's a priority for the government. And so what you'll essentially see is they're examining how 6 major sectors, which essentially add up to the entire economy, will make the transition to net zero, what policies they're going to put in place to accelerate that transition, or what policies they're going to put in place to drive research and development in things like agriculture sector emissions, and what policies they're going to put in place to protect things like international competitiveness of our trade exposed industries in a way that actually provides them an incentive to continue to invest. And an example of that would be the current government's discussion on implementing a carbon border adjustment mechanism in Australia, just like the EU. And if I had to put a bet on it, I'd say that by the end of this year or soon after, the government will have a formal policy of putting in place some sort of carbon border adjustment mechanism on Australian imports, on imports into Australia of emissions intensive goods, so that our industries continue to benefit or compete and have the incentive to put investment on the table early to reduce emissions. But also the other reality is it would also create a revenue stream for the government to use on other things. So in conclusions, essentially investors are mainstreaming climate risks and opportunities. I'm always struck by, we take a lot of senior executives, and people are on it, like CIOs and CEOs, to Canberra all the time. These people are making very large decisions about very large sums of money every day. But we'll get them down for 3 days and they will continually talk to policymakers about how they see this as the biggest systemic risk that they're facing, and wanting to work with government to actually find solutions to make sure that investors can deliver long-term returns to their beneficiaries. achieving this and actually making sure that we actually get those returns requires both limiting emissions, so therefore limiting the amount of warming that we have, but it also means we have to invest massively in adaptation. And I don't know, I probably will stress this again. Like, the cost of adaptation in Australia is going to be far larger than the cost of the transition. We are one of the most exposed developed countries to the impacts of climate change, if not the most exposed. We are also in a region of the world which is very, very exposed. And we're already starting to see the tip of the iceberg of this with insurance premiums going up. And, you know, many, like 1 in 10 Australians now can't afford insurance. And our members see that as well, because they've also got to pay insurance for their assets as well. So, like infrastructure. So, you know, this is going to become a very big issue. And indeed, one of the things that will come up, and one of the things that investors are particularly interested in, is how we actually do managed retreat. And, you know, we're going to have to move people away from danger. Who's going to pay for that, how it's paid for, and how it's done in a socially equitable way will be very important. And why that matters to investors, they've got a whole bunch of assets in these regions. They need to understand in the long term if there's going to actually be people there to actually go to work at those assets. The fundamental problem that we have, really, if you cut all the way through it, like I sense from my engagement with, but not just investors, but also companies, that there's a lot of desire there to get on with the job, make the transition, make it orderly, make it just. But the real handbrake on all that is a lack of stable long-term policy in Australia, and indeed in most markets. We're not seeing the shift in policy that is required to achieve the goals that the governments have set themselves, and investors have set, and companies have set. So that's our fundamental challenge. The good side, the upside of that is, over the next 2 years, we are going to go through a very big global process to try and address that. And we saw that, the first sign of that, at the Conference of Parties last year, where governments agreed, for example, large numbers of governments agreed to triple renewable energy capacity, and all governments agreed that we would transition out of fossil fuels. Now governments need to go away and do their homework about how they're going to do that in each of their jurisdictions, and by March 2025, come back to the international community with their plan, and to articulate how they are going to achieve the global goals that are agreed. I've banged on about it a bit, so I won't bang on about it again, but yes, we need to shift the investment response from physical risk, from divestment to investment. The last thing we need is investors not investing in Queensland anymore, because both transition and physical risks are extremely high. We need to actually have we need to work with governments to make sure that we still have opportunities to invest in those regions. And finally, it's hard. You know, I've been doing this a long time. We've done a lot of work. Like, when I started on this journey, we were on track for 6 to 8 degrees of warming. Now we're on track to 2 to 3. So we actually have dented it. We have made a difference. You know, fossil fuels are going into structural decline globally. So, yeah, but we need to accelerate, and that's going to require collaboration, hard decisions, and hard work between governments, investors, businesses, and communities. So I'll leave it there.
That's fantastic, Erwin. Thank you so much. That's a huge amount of information. But I think that a point that really came out for me was a key issue here for international and Australian investors who are trying to find opportunities to support not only the emissions reduction part of climate change, but, as you emphasised, ameliorating the impact and putting in place plans to help us manage the inevitable, as you said, baked in climate change that's going to happen. Is this and it's sort of common through trade policy at the moment globally, as well as investment policy, and that is this shift that governments are being required to make, at least in Australia and the US, and, you know, Western sort of democracies and Western economies, where probably for about the 50 years up to about 5 years ago, the approach was to let the market work, just to remove government barriers, to allow freer flows of goods and services. But we're now faced with this issue with climate change that is really requiring government to re-engage in markets to achieve particular outcomes. But I think an argument, the reason why they previously supported open markets was because governments weren't very good at this. They weren't very good at identifying what business needed to do to help them achieve particular outcomes, and that was in particular sectors. Or so I guess, so for the IGCC, you're asking for policy certainty and for policy detail. I mean, I'm keen to know, how hopeful are you of at least the Australian government being able to provide the kind of policy certainty and detail that you think investors need? And then, I mean, I've got a follow-up question, and that is, well, even if they get that policy certainty in light of the industrial subsidies coming from other countries, is that going to be enough? And I know that's a big question, but I'd love to hear your view.
Like, I think we have an opportunity this year on a policy point of view, because essentially what is happening with the sector plans work that I mentioned is, while they're framed about sector by sector plans, essentially what they are, when you add them all up, is an economy-wide policy response to the issue of climate change. What's changed is, in the past, when we talked about that, we traditionally talked about carbon pricing as the most effective and efficient mechanism to achieve that. Many countries have tried that with various degrees of success, and those carbon pricing mechanisms have worked. But I think it's become really clear from the experience we've had globally over the last 20 years on policy that carbon pricing by itself is never enough. You know, there are other major externalities and market failures that exist within the system that are going to prevent the full scale and least cost decarbonisation of the sector. So you do need some level of sectoral policy. Like, the government's done he has done a huge amount of work over the last month. Like, you know, it's been pretty astonishing how much they've done on climate policy in the last little while. But I'm reasonably optimistic that we can get on a trajectory to deliver a good outcome. I think one of the core issues within that, which again the government is starting to address, will be how we transition the regions. And that is really, there's two parts to that. One is about, you know, when investors are thinking about, say, your Gladstones or your Latrobe Valleys or your Hunter Valleys in Australia, or your Collies in Western Australia, or the Northwest Shelf, or whatever. When they make their investment decisions, they want to know in those regions that there are communities there that are healthy and working, and then the social infrastructure is in those communities to support the projects that the companies are promising. And I think this is something that needs to be explored much more, because the biggest problem we have here is political backlash, and it always is. Like, if, you know, we're already seeing from the opposition a very aggressive campaign against the rollout of transmission infrastructure, which is needed to support the renewable energy build. So, you know, there has to be, and this goes back to the point I make here about collaboration, like, all of us have a role in engaging with our relevant stakeholders, whether they be communities, businesses, unions, environment groups, governments, to try and form consensus and build off that. Because if we don't do that, then we'll go back to the situation we had a few years ago, where 70% of investors that we surveyed said that climate policy was the biggest barrier to investment in Australia. It's a bit of a heads up, it's dropped to about 40% this year, which is good news, but we really don't want to go back there. And I think the other thing that's just recognised is that, like, it's also caught up in just a general distrust of governments in the community at the moment. The community is very divided, it's very divisive. But they want governments to implement plans, and they want to see them to be visible. And things like, you know, regulation and subsidies, even if they're not necessarily as efficient as carbon pricing, they're much more visible for people, and therefore much more easier to sell. And that's just a reality of politics. And, you know, you don't get good policy unless you consider politics.
We've got some people online, so if anyone has any questions that they'd like to put to Erwin, please pop them in the Q&A, and we will get to those. But I think the other point I wanted to touch on was, obviously your members are in the game to make money. You know, they're not charities. They want to invest in profitable enterprises. And I think often those companies have the best understanding of the technology, or at least they're doing the most work into the kind of technology or the kinds of projects that are going to successfully achieve what they say they're going to achieve, which in this context is also aimed at either addressing emissions or encouraging emissions reductions or achieving emissions reductions, as well as, I mean, the amelioration piece that you touched on sort of boggles my mind, how you actually do, as you said, it's very difficult to do. You can't get a spreadsheet out and factor in the different elements into ameliorating the impact of climate change on the physical impact of climate change. So in terms of your members and their need really to generate a profit, I guess, are government subsidies really critical to that, do you think, in climate change policy?
Yeah, you're absolutely right on the I just quite leave it. If it's not there to make, they're not there to make money. They're there to deliver good returns for their members.
Yes,
that's what they're legally required to do. And what I really enjoy about working with institutional investors is like some of them, their people won't be retiring until after 2050. So that's what they're having to think about. Now, how do we deliver returns for them? And that needs to be balanced against the people who are retiring in the next 5 years, and how we deliver returns to them. And so that's a pretty hard tightrope to walk at times. But I think the subsidy question, the way we generally talk about it is we don't need unnecessary subsidies. Like you mentioned the industrial policy in the United States and the IRA before. We can't match that. It's too big. But what we can be is smart. So, we have comparative advantages in a whole range of industries potentially in this space. So, for example, I sit on the government's advisory group on its hydrogen strategy. And if you just look across the field of what the opportunities are for green hydrogen, just on that, they're quite significant for Australia, whether it be in green iron, in green fertilizers, green aviation fuels, etc. So I think the conversation we need to have is, okay, so where is Australia's comparative advantage? Be hard-nosed about that. I don't think, I think the view a few years ago was that we could build a whole bunch of new steel industry here. I think that people are saying, no, we can't compete with the Japanese and the Koreans on that, or the Chinese. So let's just supply them the iron pellets instead, because that makes economic sense. And it also makes economic sense for them as well, because they don't have as much embodied emissions in their own imports. So, yeah, I think it's about being smart with subsidies. I also think it's about being smart with regulation. Some sectors, it's much harder to subsidize and price something to make an impact. So, one of the most successful emission reductions policies we had in Australia, which John Howard implemented, was banning land clearing in certain places. And you just regulate it. You don't need, it's as simple as that. It's trying to create a whole new market to try and fix that problem is an absolute nightmare. So I think it's a balance across the thing, but it's fundamentally the issue we've got here is, we need a level of bipartisanship here as well. And I think that's what is most concerning in some respects to our membership, is that, when, we have both major parties committed to net zero by 2050. One of those parties is committed to develop a plan by the end of this year to show how they're going to do it and submit that to the international community. We don't have any details from the other major party on how they're going to get there at all. And I think we need to get to a position in the parliament, like we have in many other jurisdictions, where, we argue around, for example, you can imagine a situation where the coalition and the government came together and agreed to support de-risking investments in new clean energy, which is called the capacity investment scheme that the government is implementing at the moment. And the coalition could just say, yes, we support this, but we're going to look at nuclear after the next election, and including that in it. So the fundamental policy architecture remains the same. And investors understand it. They're familiar with it, they're comfortable with it, and then you sort of tweak it with various things depending on your political color and what's most important to you. So getting that stability across policy is, probably the biggest challenge we've got, I think.
Politics just constantly getting in the way.
Yes. Yeah.
I had a couple of questions which were really getting into the weeds a bit in terms of the quantum of finance Australia might need, but it seems the IGCC is much more focused at the high level policy and trying to get the detail, and you're less focused on, I guess, specific projects and looking at specific investment requirements.
Yeah, so we're sort of, because as I mentioned in the present, investors are universal owners. By and large, they own everything. So they need to understand the systemic response from government across the entire economy. So that's where a lot of our policy emphasis is on those systemic policy interventions that can shape markets, provide clarity and provide investment opportunities. But that said, that then flows through to the project level. So we did some work last year looking at those nations which had been most successful in developing globally competitive, innovative industries in this space. And one of the core features that pretty much all of those countries had was that they have a policy framework that starts at the beginning at the R&D phase, and then it is targeted at each in part of the investment stack that goes up to the large investments. So you start with R&D. They've got a policy there on VC. They've got a policy then on private equity. They've got a policy on equities, and they've got a policy on infrastructure. So they've actually taken a holistic view to it. And what that does is it creates a pipeline of projects. And that's what investors are looking for. They're looking fundamentally for a few things. If they're investing in a company, they want to see that it's got a pipeline of projects. Mm-hmm. And those kinds of policy frameworks help develop that pipeline. The other thing that is of course really important for them as well is making sure that those subsidies are targeted and done well. And I was going to have another point. Oh yes, and that's communicated. Like one of the issues that we've got is that investors sometimes feel like they're in a bit of a washing machine. We're getting a policy announcement every day. And it's pretty hard sometimes to see how all the different bits sit together, whether it be from the feds to the states to the local government level. And I think one of the innovations that hopefully we'll see over the next 12 months or so, and I think is potentially likely, is that the new net zero agency or authority that the government has established to manage the transition in the regions will become a bit of a one-stop shop for investors to sort of access and understand what the government programs are across the jurisdictions. So all the way from the feds all the way to the states. If they do that, they're getting a more holistic picture. They're seeing how they can potentially get things to work together and make more of an investable proposition.
Normally when we talk about international investment, the kinds of issues we're often looking at are things like the Foreign Investment Review, but that's in terms of foreign investment into Australia. So the Foreign Investment Review Board, Australia's taxation policy, the cost of workers, a bunch of other issues that investors look at. It looks like, so I'm assuming investors in the climate space confront all those issues, and then on top of that, there are the climate issues. Do they come up for you, though, things like tax policy and Foreign Investment Review Board restrictions?
No, the areas that come up most outside directly around climate policy are really skills training, workforce. Do we have the workforces that we need to deliver this because essentially, like, if you think about it, this is the mining boom on steroids. And we do require a lot of skills. We do require, I think there was an estimate that I saw the other day that we needed about 20,000 new electricians. Yeah. So there's some, we need to get the training and skills in place. The other thing that I sort of think that they increasingly focus on is what I mentioned earlier, is just making sure the social infrastructure is there. Because if you're going thinking, I'll just pick Gladstone out of my hat, being a Queenslander, I've been up there quite a few times. The scale of investment in those places to support a sort of an orderly and just transition in those communities from the one that's very emissions intensive to one that's not, can be quite difficult for investments because the scale of the investment is too small. However, if they can see a package where you're getting healthcare, you're getting education, you're getting tourism, a whole range, and they can see sort of an overall package, and then if they can work with government through bonds or other structures to actually aggregate up those investment opportunities, they actually become big enough then where investors can potentially get engaged. So it's sort of become and then probably the best way to think about it actually is the term that's often used and where this fits within investors in the ESG space. It's environment, it's social, and it's governance. They're all those three things all sit together and are working together. I think on the foreign investment side, one of the thing that is most interesting for me is just the increasing focus of major international investors on Australia's sovereign debt and fixed income markets. And, sorry, we're now starting to see frameworks emerge, which essentially give investors, an indication of how credible their climate policy is, both from the transition point of view and from the adaptation point of view. And they're looking at that in terms of making a decision whether they invest in our debt or not. And those things are going to become increasingly sophisticated through time. And if you're a major, huge European investor, you've got a net zero commitment, and you've got a choice between investing in something in, electric vehicle supply chains between Australia and between Canada and the United States. And they've got credible policies in place, or you look at Australia and we don't have that, where are they going to put their money? Because these things are going to flow through into debt markets, because Australia is very exposed for a whole bunch of reasons. And indeed, some analysts suggest our AAA credit rating could be under threat within the next 5 to 10 years because of climate impacts.
We've got a question from Brian Clark, who's one of our ACITI directors. He's asking about looking forward. He says, so the projections in terms of Australia's energy requirements, he's saying, looking forward, our population is projected to rise 2 to 3 times what we have now. And the energy requirements of an economy that is 2 to 3 times what we have now is obviously going to need a lot of new generation beyond what we currently have. So the question he asks is, where do you see this future needs debate as opposed to what the debate is now, focused on the transition of the current economy? To be perfectly frank, I think the current economy is trying to manage currently is hugely complex, but I mean, it's a good point. We need to be preparing now for what the future's likely to bring.
Yeah, and there's lots of, I think the first thing to say is that we have globally, and indeed in Australia, decoupled economic growth and population from emissions over the last 20 years. Like, technology is having a major impact, and even with increases in Australia's population, you wouldn't see the same proportional increase in energy demand, simply because electrification of households is now the cheapest option in the long term for households. And the economics of that are changing very rapidly. So you will increasingly see households moving off the grid. Where it becomes more challenging is where you start talking about the big industrials, and the development of a hydrogen industry, the shift to electric vehicles is another big thing. So the core and the other big challenge associated with that is a lot of our energy infrastructure is pretty old. Most of the coal-fired generation fleet are getting pretty close to their end of their technical life, if not their economic life. And most of the existing generation fleet will be gone within the next decade or so. It's just because it's old, and it can't compete in the market with low-cost renewables. So that's a reality. So then it becomes a question about how you manage that. And the first thing we really need to do is find a way to create the enabling environment for the very large amounts of distribution and transmission infrastructure that we need. We've got lots of renewable energy zones, we've got lots of national plans, but we are starting to confront some very significant community opposition to some of these sort of projects that we're going to need if we want to keep the lights on in the longer term. So that's a real challenge for both. And this is, again, one of my frustrations with the current political debate is one side of politics is making hay with that, as opposed to both of them trying to find a solution of how we address it. And I think, and ultimately, I think from an investor's point of view, the way they're thinking about it is, what is the best long-term return? What is the best outcome for the economy? And if you look at it, pretty much all of the economic analysis that's been done is that a rapid transition to renewables is the least cost option. The longer you stay attached to fossil fuels, the higher the cost because of their exposure to international markets and gas being the most expensive form of energy at the moment. So I hope that answers the question.
Yep, that sounds good to me. We're sort of coming close to time, but I did have this question, and it's something that we try and do at ACITI, and that is getting people from different sectors, from business, from government, from think tanks, from academia, to talk to each other. And obviously in this area of climate change, there is almost no greater need than getting the technical specialists, the scientists, the economists to come together and explain what they know to government policymakers. And I know there is a lot of that happening, but I guess in terms of having seen this issue evolve over a couple of decades now, how are you seeing government engaging with, I guess, the technical specialists in the community in terms of informing the kind of policy that investors are looking for?
Well, I'd probably say the first thing I'd probably say actually is that you would be surprised from the public conversation how much consensus there actually is. Like we're on a forum with the Business Council, the ACTU, the big environment groups, the big sectoral groups like the Aluminium Council and the Energy Council, as well as Australian Industry Group and others. And we meet regularly to discuss climate policy. And when we have those conversations, there is actually a lot of common ground. There is no one wants a high cost outcome. Like, it's not good for anyone. We want an orderly transition. We recognize that if we want to have an orderly transition, we also need a just transition, which supports workers, supports those who are most vulnerable in the community to the changes that are happening. So that's always gives me heart, and unfortunately gets a bit drowned out by the politics of the day. Like, I think the sector plans work this year will be a real test for the government on this, because it's pretty complex. You're talking about a diverse range of sectors, from electricity through to resources, through to built environment, through to the land sector. And they are going to have to confront there are various niche issues within each of those. But of course, then there becomes the issue of how would they actually interact with each other, which again makes it even more complex. But the good thing we do have here is the Climate Change Authority, which is our sort of independent expert body in Australia, pretty diverse board of scientists, economists, business people, farmers, etc., are actually doing some detailed work to inform those conversations on what each sector can do, what each sector can't do, what are their respective roles, and how they all interact. So that's an opportunity. But I also think there is also a challenge within government in that, like they don't. My members, get out of bed in the morning. How do we get the best long-term returns for the day? The mindset is very different, and I think there is a very big gap between the government's understanding of what the investment community needs in this space. But also on the other side, I think there's a gap between investors just thinking that government should just do stuff and all that kind of. So there is a bit of a gap there, and there's actually a real lot of upskilling that needs to happen within the government, particularly in the public service, on what investors and indeed companies are doing in this stuff, because there's some really sophisticated thinking that's going on both here in Australia and globally within those institutions. And we need to find a way to actually break down the barriers to exist to actually get that collaboration happening in a better way. A lot of it is simply mistrust. Like, I work for an industry association. I see the looks in people's eyes when I sometimes say things, which is, "Oh, you're just rent seeking." But we've sort of got to get over some of those issues. And I think that it is a huge opportunity, and we're not going to always agree on everything. But if we don't do it, it's just not going to work, I don't think. It has to be done collaboratively. And it actually, my experience when I've sort of facilitated conversations between environment groups and people who work in energy intensive industries, and companies and investors, is when you actually get them down in a room together and they actually look each other in the eye and they actually understand that there are actually real problems and they're not making stuff up. a lot of trust can be built and you can actually get things done. So I'm hoping that over the next 12 to 18 months to 2 years, we start to get into a much better place where policy is stable, the public conversation is more evidence-based, and we actually have both major parties agreeing on the fundamentals. And if we get that, we can get a lot done.
It sounds like, I mean, I think it brings us back to where we began. And really, when you're talking about engaging with policymakers as well as your members, the IGCC has a really critical role in sort of being the interpreter for both, explaining to investors what government can and can't do. And yes, you have an interest in terms of your members' interests, but at the same time, the government's obviously recognised that it can't achieve very much without having the private sector on board and 100% supportive. So you then interpreting what your members need for them to be able to help the government achieve what it wants to achieve. So incredibly important role for the IGCC.
Yeah, and it's the fun part of the job, yeah.
It's fun. I think it's called the ham in the sandwich, Erwin.
That's right. I've been a ham in a sandwich for 30 years now, 35 years. So I haven't been fully eaten yet. Maybe I don't taste very good.
Fantastic. Thank you so much. That was really informative. So often with these webinars, I feel like we've just scratched the surface. And for me, your discussion on the physical impact and how we recognise and to manage that has opened a whole can of worms for me in terms of questions and how you even, as you say, calculate how we address that. So thank you for opening a can of worms, but thank you too for talking about the work that you're doing, and thank you so much for bringing all your expertise to this webinar and being so willing to share it with us.
No worries.
Thank you so much. Right, I just need you to turn off the recording. We're done.
How do I do that? Oh, there, up there. There we go.